So in case you don't know who Brave New Coin is, just real quick, we're based in New Zealand. I live in DC, but New Zealand's kind of known for 4 things: wine, Lord of the Rings, extreme sports, and Brave New Coin. It's weird. It's weird like that. So a few questions of the audience. I always like to know, who's sitting out there? Jim. Who makes more than 5 trades a month? Raise your hand high. Raise it high. 5 trades a month. Liars, all of you. Who's ever used the DEX, a decentralized exchange? Anybody? Some people. Low turnout there. Is the bear market over? Raise your hand if you think the bear market is over. I need to know which tense to use. That's lukewarm. I'm not really feeling that one. And then lastly, are there any regulators in the room? Just go ahead and raise your hand. Okay, good.
You have to say or it's entrapment.
That's right. And just in case you don't know the panel again, Phil, X, Bitfinex, Tether, emphasis on X. Miha from Bitstamp, Austin from Kraken, and Ryan from BTSE, who's sponsoring our drinks later. So I'll go semi-easy on you. So lately, as we all know, we've been navigating a ski resort of slippery slopes relating to regulation, fractional reserve of stablecoins, shadow banking, chain reorgs, IEOs, and securities listings. So we're going to talk about all of that stuff, hopefully, if we have the time. But first, Phil, what are you doing these days? Do you get residuals from Harry Potter? What's your what are you up to?
Well, I'm busy being semi-retired, I guess.
Okay.
But I live here in New York, and I got my family, and kind of trying to enjoy that, doing a house renovation. No, it's no fun.
We can tell you've been hitting the gym too.
I've been going to the gym. I've been working out.
That's good. Are you? I saw some VC stuff. That's only why I'm asking. Are you involved in sending you white papers, what any of that stuff, or what's that going on with?
I'm sorry?
I thought you were doing crypto VC stuff.
I'm investing. I'm doing other things. I hang out with those XBTO guys, and I'm always looking for opportunities. Don't shill me your ICO, but
Gotcha.
Yeah.
Gotcha. All right, and for everybody, so the bear market, the difference between 2013, 2014, 2015, from an exchange perspective versus now, considering this is what the panel's about. Miha, why don't you start us off? How has this past year been for Stamp versus any other time?
It's been great.
Yeah. Great from a user.
There's not a single exchange operating in New York anymore. It's it looks like it. The price is moving a lot. So we just hit 7K for the second time today.
Yeah, awesome.
And for us, that's always been a good time to just keep our heads down and do the work. Because when things are parabolic, you can't really do anything. You just have to onboard people and deal with all the stuff that's going on a day-to-day basis. Mm-hmm. So now you can really just scale and prepare for the next wave, if you call it like that. But this bear market's been tame compared to the previous one.
Nothing.
The previous one's been brutal.
So less of a crypto winter, more of a crypto snowstorm?
More like a crypto vacation.
Okay. And Austin at Kraken, are you guys seeing an inflow of users now, or previously in 2018 when there was a lot of volatility, a lot of volume? Any
Well, obviously, December 2017, January 2018 was unprecedented, and still not. I think there's no exchange that's really reached those levels again, but it's coming, and now we're still growing. I think all the major exchanges are still growing. It's not 50,000 signups a day any longer, but it's still growing. There's more activity. There's more traders coming on board, and I think what you're seeing now from the 2017 wave is you're seeing kind of the trailing effects of people who just got in for the first time. They're becoming more sophisticated. There's a minority of the kind of that retail wave that have stayed involved, become obsessed, and you're seeing a lot more responsible kind of professional traders entering into the market. Maybe it's not quite the institutional that we've been hearing are coming for the last 6 years, but there's more and more legitimate traders, more and more legitimate money coming in.
And do you feel like there's a push towards focusing on institutional versus retail?
Well, there's been a lot of rhetoric for years and years. I've been hearing since I got involved in like 2013 that the institutional wave is just around the corner, and there was plenty of people that were laying their bottom dollar on like, it's right around the corner, we're gonna build this whole structure because Goldman's gonna come in any day now. But the reality is there's so much slave money out there. There's infinite dollars, right? They just print infinite, and then you go to the bank and they print 9 times, 10 times more, and then the next bank prints 10 times more, but there's only 21 million Bitcoin. So who do you want to cater to? You got to cater to the coins. There's only 21 million Bitcoin. That's your audience. If you're an exchange, everybody should realize if you want to be successful, you got to be on the supply side first. The slave money will come. My opinion.
And then Ryan, you guys kind of are launching luckily coming out of a bear market. I don't know if I was launching an exchange, I'd want what we're seeing now, sort of a tailwind. What are you guys going through from like a startup sort of perspective?
Yeah, so long story short, for all of the founders, we're kind of from the financial world. So we have been investing in Bitcoin, the infrastructure for quite a long time. And so what we see is, of course, there are a lot of pioneers who have done excellent work in this crypto exchanges. So what we
just because they're sitting on the panel, it's okay.
We all admire Phil Potter.
You all root for each other, whatever. Yeah, go ahead.
So what value we can add to this system, right? What we're thinking is, one is the most crucial challenge is liquidity, right? So, one thing is how to use the existing stock funds. And what we find is for all the different assets, many of them have been scattered into different assets. Like you have a Bitcoin to trade with Bitcoin futures spots, Ether futures. So the first thing we thought about is how about we put everything into a pool, so we can use the whole assets, the whole liquidity as a pool. So everything will be more take advantage by everyone. So that's the first thing we want to bring in. The second thing is how to increase this liquidity is if we can bring in incremental funds, which is like we just talked about the institutional funds. But how to do that? Institutional funds usually have to go through fiats. They want everything to be nominated by US dollar or euros. So that's something we develop is from the linear future. So the linear future, which means all the Bitcoin futures are nominated with USD. You can just hedge all the risks, all the volatilities with US dollar money directly. So those two things we think can bring more liquidity to this system. You take advantage of the existing money and bring more incremental value. Yeah.
And Phil is like a casual observer now, a conscientious trader. I don't know. I don't know. I want to put a label on you, but I can't. So what have you noticed over the past year as far as price action, volatility? From like are we even in a bear market? Some people don't think we were.
Well, I mean, I certainly had the view that when we were up those lofty levels, that it was time to sell. I mean, that was mostly what I did. And I think that as the market came down, it was pretty clear to me that it would be a deep. We'd have to go down a lot for us to be able to find the bottom. I was calling 3,000 at the top, and I'm lucky that in some senses I was right, or very close to it. But the reason is that we just had to take enough pain to get all the noobs out of the last cycle. And this is what happens in Bitcoin. It always goes through these cycles where you have a hype cycle, you have new entrants come in, and we need to turn those new entrants into battle-scarred veterans before we can kind of recruit the next group that kind of leads the wave. So I agree with Miha that this was pretty mild. I mean, the previous bear market was a lot longer and had the sense that the crypto experiment might be dying.
I remember the words when we broke 200 the second time.
Yeah.
This might be a failed experiment. Like people were
Yeah.
legitimately, these are OG crypto people talking about this.
I think that it is like anything for this to be a successful endeavor. It's just, I think the longer that Bitcoin survives, the longer this is a thing. It's 10 years now. I mean, it's a thing, and eventually people will realize that this is something that they need to own a little of, and I think that's happening, and I think that we're going to see. I don't want to be too bullish here, but we could very easily see those highs pretty quickly again, because remember, there doesn't take a lot of money to chase not a lot of supply. And the imbalances can create very shocking movements, especially now we have a lot of leveraged products out there too. So, I mean, BitMEX is really, an enormous market, enormous. And, we're seeing a ton of other exchanges that have been largely enabled because of Tether. And there is, I think that we'll see the all-time highs again, and we'll go higher, and then we'll probably have another crash and another crypto winter, and start the cycle all over again.
Yeah. So for Austin and Miha, are the headlines about like releasing staff during a bear market for you guys, is that even relevant? I see all this stuff about, we released X support staff, and there's this hubbub like,
Release is a euphemism for firing?
Yeah. These exchanges are in trouble. It's a bear market. Are they going to survive? From our perspective as users, I think we expected a more thinning of the herd from an exchange perspective. Do you guys feel like there's too much noise out there, too much competition? What do you think?
You want to take it?
Well, there's a lot of competition, but it's very healthy. If you look at the reality, though, I think this has just kind of been more widely known, but there's very few like legitimate exchanges with legitimate volume out there. If you go to CoinMarketCap and scroll down the list of 1,000 exchanges, literally 990 of them are all bullshit. There's like 10 exchanges, 15 exchanges with real volume on it. But as far as like kind of staffing levels, I guess you got to chunk it up, and more broadly, you have to predict now and build now for what is kind of coming in the future. We saw with 2017 that nobody was ready. Nobody kind of predicted that much activity, that wave of kind of Q4 and the beginning of Q1 2018 was coming, and it was just failure all around at many levels. Bitfinex kind of performed very well technically, but they had their failings as well.
You can't hire support staff on an exponential basis when you've got an exponential number of support tickets. It's just.
And as far as staffing up in other aspects, there's you can go to the legacy financial system and try to pull these, but the time it takes to get up to speed on this industry, it takes a while, because it's unique, and it's difficult, and it's moving so fast. And I think a lot of people thought that they were going to come in and kind of copy and paste whatever was going on in, I don't know, CME or whatever traditional marketplace, and now the big boys are here, and we're gonna, you guys can move aside. You made your money and you had your fun. Now the big boys are here, but they seem like they failed too, right?
Yeah.
If any of these institutions would get the load that we were all getting in 2017, they would all collapse, not like after 6 weeks. They would collapse like the second day.
And most of these traditional exchanges...
We're running 24/7 businesses.
24/7 with at one point 10,000 concurrent users or more, right? I don't know what BitMEX probably has 10,000 concurrent users every day. if you look at these traditional exchanges, you have to buy a membership seat, and it's a very small pool that are actually doing the actual trades on, and then everything else is kind of funneled down to brokers and prime brokers. Very few people are actually trading on these exchanges. I mean, the model that the Bitcoin exchanges have forged it's literally unprecedented.
Yeah, and you have to grow like 5 times, 10 times in 6 weeks, and and then just imagine what it takes when you have all of a sudden you have like 300 support staff.
Yeah.
And most of them never heard about Bitcoin or just heard about Bitcoin because of the price.
Sure.
And what kind of support is that? Like not much of support, but they can do the job to the best of their abilities. And when you top, and there's less interest because no one's kind of coming in if the price is decreasing, then obviously you have time, like I said earlier, to focus on the quality, on educating people. And if, for example, that's also the time where you let go some of the staff who maybe are not up to the standards, maybe they don't really get it. It's for various reasons. Or people just realize that this is like too turbulent for them, and they don't want to stay in this industry, which is kind of fair enough.
Mm-hmm.
But at the same time, once you've been through a couple of cycles, you know what to do, in a certain level of the cycle. And every time, the more cycles we get through, the better we navigate it. And that's why all the new exchanges just get wrecked the first cycle they see.
Sure.
Yeah, I mean, it's a very unique kind of business because you're handling money, right? And so you're handling other people's money, a lot of it, and you're running a 24/7 business. And if you try to ramp up your staff really quickly, you actually create a dynamic where you actually become less productive while you're trying to train and onboard new guys. It's like a development team. You try to double the size of the development team, you're pushing back your development priorities because the new developers have to have to learn from the old developers, and that kills productivity.
Sure.
So it is a tough business, boy. I tell you. So my first gray hairs I got was late 2017.
So Ryan, are there people like knocking down your door for a job, or are you guys seeking people out? Have you noticed, like, just from an employment perspective, is it difficult to find people that are, good for what you need, or?
Actually, we'll start from the founders. So usually the founders decides the ceiling of the company, right? So the founders, we have founders from traditional financial world. One is Brian. Brian is a former Goldman Sachs traders. Have been trading for years. So he decided. He built up his team to design and the proper financial products for those what traders needed to use. That's why we have this linear future products. So you have the trading pairs with BTC with USD directly. And John is another founder who has been working on this banking system for decades. He's built up this team to work very closely to the banking system. That's how we got this fiat gateway. We think that's one of the crucial for a lot of traders right now. For me, I'm the leading investor of one of the largest IT company in China. So what we know is you don't only need the financial talents, but also as the internet applications, you need very good marketing team and operation teams to promote. So with that perspective, we gather everyone together. So I think with these build up, the talents come to our teams quite fluently.
Gotcha. All right, well, let's switch gears a little bit. We'll discuss stable coins and Tether specifically. What do you guys think is like the end game of stable coins? As far as, is every exchange going to have their own stable coin? Are we just going to have one that sort of rules them all? I know, so Bitstamp doesn't list Tether, Kraken does list Tether. For Phil later after, what did Tether initially serve as far as the market need? And is that market need still there? So let's just start with Austin as far as...
Well, that regard, I mean, Phil's obviously better suited to speak to it, but I think it's quite clear, though. Tether served the market need that the banks were not adequately serving the Bitcoin markets, right? The banks had resistance at every aspect. That's why you would see massive spreads you still see giant spreads on all these exchanges, and it's not Bitcoin, right? Bitcoin's flowing, hopefully, relatively painlessly, relatively easily. It basically teleports. It's the slave money. The slave money doesn't work, right? Every single gateway, there's somebody there to try to check you and balance you out. And so the whole point of the stable coins is to as a proxy to allow arbitrage between the exchanges to get some kind of equilibrium there. And if the banking system worked better and it was more cooperative with the industry, there would be less need for the stable coins. And every exchange has all their stable coins and all that, but let's be realistic. I mean, if you look at the numbers, none of them matter. The only stable coin that matters right now at all, it has any kind of relevance and real utility is Tether. Everything else is just, a cheap imitation.
Okay. So Miha, you guys, you have no stable coins on your exchange at all?
So we are not issuing any stable coins.
That's okay, that's good.
And we're not listing any for the time being. And that kind of comes along with our logic that with diversified banking and putting a lot of emphasis on building a solid and robust banking infrastructure and network, we don't actually need them, and neither do our customers.
Oh, you have the regulatory path you guys went down probably prevents you from using Tether in some level.
In a way, maybe, but also even when you get the regulatory approval, like you get a license in Luxembourg and then you think, okay, I'm done, I'm good. You walk into the first bank and they say, well, good for you that you have a license, but no. So it doesn't improve anything. You still need to do the work. But we now have something like 15 banks globally, which helps things a lot. And with the efficiency of the market and also with the more kind of professional and sophisticated participants, you also see slave money flowing in a more efficient and faster manner. But I agree that, for example, Tether or stablecoins in general are very useful, for example, in markets where banking is completely cut off, but you have a lot of trading. So that would be, I think, Asia. Phil, you told me that you have like insane velocity in terms of volumes.
Yeah, I mean, that's the thing that I find so shocking. I mean, just so that everybody understands, I mean, I've not really been involved at Tether or Bitfinex for over a year now. And I've been learning new things about Tether even just very recently. I talked to a trading group out of Asia who's telling me about how Tether is being used not for what I assumed was basically inter-exchange arbitrage. I've always figured that's the killer app for Tether. But no, Tether is being used for as a way to post collateral for various types of OTC transactions, some supply chain management stuff. I mean, it's really the only thing where you say, okay, well, I need to put $50 million into escrow, and by the way, they want to use dollars. Asian hours are not US hours, so, and then you're going through the SWIFT network, it could take you 2 to 3 days to move money. So something like Tether is apparently being used by non-crypto related stuff now, and that is quite interesting. But I think that the statistics don't lie. I mean, the turnover on Tether is something like, it ranges anywhere from 500% of the total outstanding Tethers being turned over a day up to sometimes 1,000%. So I think the total, one day there was $25 billion moved in Tether in one day. I would imagine, I don't know if anyone check numbers, but I imagine we're probably doing numbers like that right now. I mean, that's incredible. Yes, and there are other stable coins. And they may find traction with different audiences, for sure. I do think it's a positive that the NYDFS has essentially blessed the Tether model, because Paxos and Gemini are, basically identical to Tether in terms of the business model, how it works, the KYC AML procedures and things like that. Tether's not regulated, but it follows those best practices. And that's, I think, important. But, it's not, those they're having a hard time getting the network effect that they're looking for.
In the early beginnings of Tether, when you guys were maybe in those meetings or whatever, did you think it would ever balloon to sort of how big it's become and the scrutiny it's sort of attracted?
It was, I first conceived this idea early 2013. And even when we got it off the ground, and we merged with the Real Coin guys, which was Brock Pierce and Craig Sellers, it languished for years. It really had no, at the big end of 2016, there was, $5 million in Tether.
Mm-hmm.
At the end of the first quarter, it was 44 million. At the end of the second quarter of 2017, it was something like 250 million. And then the end of the third quarter, it was something like almost 500 million. And then at the end of the year, it was like 1.8 billion. It just, I was pretty floored. Pretty amazing.
When was the first time the bank gave you a call?
Well, we were banking at the time. A part of what made Tether work was our relationship with Noble Bank in Puerto Rico. They had created a really great settlement system. So all the big ARB shops were able to bank there, and in Tether and Bitfinex were able to move large sums of money between themselves and or between their customers. It was a good relationship until it wasn't. But yeah, it was a lot of money. I think a lot of people, there was a lot of cognitive dissonance over how could Tether have this kind of money. And I think that the thing that people don't know is that all the exchanges were sitting on billions of dollars. So there's whatever there was, $2 billion at the time in Tether. Bitfinex itself had another $2 billion or so. I'm sure Kraken and Bitstamp are at least sitting on over $1 billion apiece, if not more, 2, 3. Coinbase as well. So that there was probably at the time, at the height of it, I think probably about $15 billion in the system overall. Tether being just the only public indication of that.
Mm-hmm.
So, that's what it is. Tether, the amount of money in Tether is an indication of how much money is actually in the system as a whole.
Sure. You can still view the cold and hot wallets of these exchanges. It's just not necessarily as widespread, maybe, as just looking at Tether circulating supply or the Tether volume and saying, wow.
It's for the criticisms about transparency, it's a very transparent system. It's on a blockchain. It's all there. You can see which where the tethers are, how they're moving. It works. It works as designed. It works very well.
So let's talk about risk, because risk with stablecoins is something that's become a hot topic recently. Is there systemic risk? Is there regulatory risk? Is there exchange side risk? Is there custodial risk? Blah, blah, blah. So Jesse from Kraken, the CEO, has kind of said, look, bro, we're just a marketplace. There's no exchange risk here. Is that right?
Yeah, we just trade Tether versus dollars, and the dollars are dollars under the custody of Kraken, so you can deposit, you can trade for Kraken custody dollars and withdraw them, or deposit dollars that then become Kraken custody dollars and buy Tether with them on a order book and open marketplace. Kraken lists a bunch of cryptos. Some of them are for sure going to go to zero, and when they go to zero, it's not going to affect Kraken or the exchange at all. Unless the exchange has their balance sheets loaded up with Tether. Maybe some do. Maybe some do because they're taking fees in Tether and they're holding on to them. I don't know. But absent to that, then there's no risk for the actual marketplace. There's risks for the counterparts on the marketplace that are deciding to hold whatever asset, right? And then there's risk in that asset. I mean, and there's risk in Tether, I'm sure. I mean, there's risk in holding US dollars, right? They print infinite US dollars, and then Tether is just further obfuscated. So there's risk in holding Tether for anybody. But for the exchange itself, anything, Bitcoin can go to zero, and we probably got to pack up and go home. But the actual underlying, unless the exchange were to be holding it on its balance sheet, which it's not.
Right. Yeah. I mean, it's that meme that somehow is going to take down exchanges if Tether fails. It's not. It's just like another coin. I mean, there's plenty of shit coins that have gone to zero, right? So.
And Ryan, are you guys listing stablecoins at all, or are you just?
No, we believe that fiat is the best stablecoin for now. So so what we produce these products is you nominate with USD directly.
Okay, so you guys will have banking then, or?
Yep.
Okay.
We have a banking to fully support this.
Good.
You want to be agnostic when you run an exchange, right? So you basically don't really care what's being traded and then what price is being traded. Our function is to offer a stable and secure platform where price discovery is possible. Mm-hmm. And if Bitcoin goes to zero, people will know that it went to zero because it's trading at zero on Bitstamp. And like Phil said, is Tether, is it okay or not? The market will decide. And the same goes for all the shitcoins and Bitcoins and the whole lot of them. And
naysayers of Tether should be happy that there's a order book on Kraken of Tether versus dollar, because it acts as a price discovery venue for people to short Tether, for people to actually see what Tether is worth on a market that's separate from others, I suppose.
Yeah, I mean, the biggest question is the fractional reserve aspect, and this has been beaten to death for years. Going back to transparency, but recently we learned that there was a fractional reserve aspect to Tether. The question then becomes, what sort of slippery slope does that entail as far as how fractional of a fractional reserve can we go? How the market will decide, arguably, but in your guys' opinion, what do you think is
how should it work?
the limit?
Yeah. So I don't have any knowledge of these recent events.
Sure.
Right? But it's pretty clear, I think, from apparently the filings from the NYAG that certainly up until November, it was certainly fully reserved. I think that, but when we say in the model where we're talking about a fully reserved model, is it dollars on a demand deposit in a bank? Because let's recognize that demand deposits don't earn interest, okay? And I think that the model for stablecoins is they need to reach for yield. That's the business model. You gather assets, people are using Tether, for the utility of using Tether, they're not earning interest on their money, right? The company is. But I would say the appropriate approach there is to do cash-like instruments, laddered treasuries, short-term duration commercial paper, AAA, that type of thing, which right now, if you're reaching for yield, you're going to get maybe 2.5%, right? That's what I think cash equivalents, anything that you would deem to be a current asset on a balance sheet. What Tether has done recently, I think from an accounting perspective, would look like this loan would look like a long-term asset, and it would no longer be in the sort of current asset category. I think that stablecoins that are fiat-backed stablecoins, I think should have the flexibility to invest the monies, like I said, in what would traditionally be considered cash equivalents on Wall Street. So.
And the market can decide, right? So there's all these other competitors out there to Tether. I guess we can presume that they're all in cash and redeemable instantly in the bank or whatever, but yet still Tether is multiple orders of magnitude greater in terms of its market cap and its utility. And if you look at even immediately following the announcement that I guess was like at 74% cash on demand or whatever what it was, I think the price, the low was like 94 cents or something like that.
Briefly.
So what was it?
Very briefly, yeah.
Yeah, very briefly, and now it's back basically at par. So you can see the market shows that people still value Tether more than the competitors, I suppose, and Tether's still more utilized. So yeah.
I think as a trader and fellow traders will recognize this as well. Like, is it fair to us as Tether users to not be completely opaque about, transparent versus opaque about what these instruments are?
If you don't think it's fair, you shouldn't use it then. You don't have to use it.
Okay.
I agree. And
I agree that stablecoins should be very clear about what their investment guidelines are when it comes to that. I don't think any of them are. I can promise you that all the other stablecoins are earning yield. Okay, I can promise you that. To suggest otherwise is just basically to ignore economics. Okay, people are in businesses to make money. I would say that there should be greater transparency. I think that the efforts for doing attestations is a positive move forward. I see a lot of coins doing that. I would imagine, since there's now more auditing firms are actually diving in and actually doing it, that I would hope or expect Tether to start doing that. But I think, yeah, I mean, there's a certain amount of transparency that can be offered, but at some point, people don't have to use it. You don't like it? Don't use it.
sure. And Miha, we were talking about.
Or short it.
Short it on margin at Kraken. Yeah.
Miha, we were talking about this earlier about, and we were talking about this now with custody and exchanges essentially acting as banks. At what point are we going to reach where we're going to start giving yields back to customers on stablecoins, on exchange holdings? Is that ever going to happen?
It won't happen on stablecoins. That'll make it a security.
Okay.
That's a pretty good point. And also, you can't really measure all the stable coins like with the same kind of metrics. USD stable coins are something completely different than, let's say, euro.
Whew.
You're
losing money on that one.
Exactly. So as a business, why would you even have a euro stable coin? So you get wrecked for 40 basis points a year.
Swiss francs.
The more it's successful it gets, the more wrecked you are.
Yeah. Well, yeah, I mean, isn't the Bund trading at -5 basis points for the 10-year German bond right now? I mean, it's like Japan.
Yeah. All right, let's switch gears to exchange hacks and this recent Binance stuff. So I think in general we can all agree that exchanges will get hacked. It's not a matter of if, but when. Mm-hmm. We've seen that with virtually every exchange. We've seen that with virtually every hot wallet. So the question, Kraken I don't think has been hacked publicly at least, but.
No, never hacked.
Okay.
Right in public.
Hey, I'm just saying.
Well, clear insinuation. I'm not happy.
Okay, sorry. So these things happen. Ideally, it's not passed down to the customer if possible. Bitfinex was a unique case. Bitstamp was able to fill that gap with internal funds back in 2014 or whatever.
Sorry, we were the first exchange to go through such an experience and come back without a single customer Satoshi being lost. That was like a first in the industry.
Mm-hmm. Mm-hmm.
And Bitfinex, from the debt token perspective, was revolutionary as well.
I felt like it's one of those situations where there's Bitfinex as a company in terms of profitability and as a brand and what have you was certainly worth more than the amount that was hacked, right? So $70 million was Bitfinex's enterprise value north of $70 million. And obviously, yes. Convincing the marketplace of that, which is extremely skeptical, was hard. But I think that we did the least bad thing that we could do. I felt like that was a really trying and difficult time. But all we could do is just try to make the best decisions possible with the information that we had at the time. And I think we succeeded at that.
And Ryan, are you looking at all these exchange hacks that happen virtually every other week Are you guys preparing for that, hopefully? Are you getting nervous? You know, the biggest exchange in the history of the world got hacked the other day. So
that's the number one job we're doing. So we try to maintain the highest standard of the security. So we designed a whole system of hot storage with cold storage and how to use multi-signature to transfer funds between them. And what I want to add to custodian actually is not just custodian with one exchanges. What we see a lot of traders demand is they have trading accounts in all different exchanges, right? So how sometimes they manage money from their LPs. So how to transfer between those accounts safely to with a third-party custodian. That's one of the big demands. So so we're working several exchanges together to have a third-party client central wallet. So we're creating a whitelist. So within the circle, all the funds can transfer safely with the fund managers and a third party. So this way, more and more like traditional old money will believe the system with the custodian. So I think that's also very important.
in Austin for Kraken, are you seeing any institutional demands other than custody, like specifically coming at you for things from an exchange perspective?
Well, for feature sets and things like that, and I mean, the entire industry has a long way to go, let's hope. I mean, from a security perspective also, but there's many best practices that even these years on have yet to be established kind of industry-wide. Tons of different like kind of value-add services and products that maybe institutional and legacy traders, investors are used to that are lacking in the crypto industry. But from a security perspective, the reality is that there's way too many coins sitting on exchanges. Far too many.
Way too many.
Far too many. I think it'll get better as more and more people get a more sophisticated understanding of what's going on here and the technology and the like. But if you see that like 10, I forget what I read something the other day, but it's like 10% of all coins are sitting on exchange wallets. There's not 10% of all coins are not trading every day. And so then we can see there's far too many coins sitting on exchanges. If 3% of coins trade every day, then there should be 3 and maybe a little bit more, you would think in terms of what is the rational actors are doing, there should be 3.2% of coins sitting on exchanges because it doesn't take long to send your coins to an exchange. The reality is, I think that you're going to have a lot more adversaries, of course, as the industry and Bitcoin gets bigger and bigger and bigger, but you're also going to have a lot more people with a lot better understanding, and the possibility to secure Bitcoin is that it's the potential is that it's much more secure than anything else we've ever seen.
But it suffers from usability. I mean, the reason why people keep money on exchanges is because they're afraid to roll their own. I mean, and I will say, I think it is daunting, It's
scary.
Okay, I got to get this little device. How can I trust the device? And I got to write down my secret words. Well, what happens if I die? What if do I let my wife know? Do I send a copy sealed to my lawyer? It's
definitely daunting, yeah.
Yeah, if you're talking about small amounts,
Yeah.
$100 of the crypto, sure, people get a phone wallet, whatever.
Sure.
You're talking about a substantial amount of money, being your own bank, I don't know. That sounds like a
I'm
lot.
sure everybody with a substantial amount of money, you press send, you get nervous for a second.
Since forever,
Yeah, it doesn't show up on the
Well,
ledger.
custodial solutions. When we talk about institutional interest coming
Yeah.
into the space, I think that there's really 2 major things that kind of have to happen. One is there needs to be institutional insured custodial services. That will take that usability problem out of the equation. And then secondly, and I think that I think all the exchanges here, and I know that we did this at Bitfinex, was you need to work when your institutional customers want to trade with you they want to settle with you on a post-trade basis. And that's an important evolution because we come in the Bitcoin world, everybody's like, well, unless the money's on the drum, I can't trust you because, Bitcoin was born out of an effort to try to reduce the amount of trust that you put into a system. But when you're dealing with a trading desk or somebody that's a family office or what have you, they are just not going to, wire you a bunch of money and have it sit on your account where they're not earning interest, okay, and wait till the time they're going to buy. So what is happening, I know all these guys do it too, is that you do it with the way the rest of Wall Street does it. I mean, this is a solved problem, right? I mean, everybody, we live in a world with T+2 settlement, and that's just how it is.
Gotcha. I'm getting the call for time. Let's just do some snap takes here. TD Ameritrade, ErisX backed, all this stuff. Competition, or does it improve legitimacy for crypto exchanges?
Improves legitimacy.
It's both, though. It's their competitors that improve legitimacy. Yeah.
Well, they are potential competitors. We first need to see volume.
Okay.
Give us volume and we'll take you seriously.
Ryan, any thoughts on that?
Big blue ocean.
Big blue ocean. Okay. Tether price in 5 years. What do you think it'll be?
$1.
Phil's got $1. Any other thoughts?
It should be, I don't know. It's hard to say because it could be 99 cents because there's somewhat of a risk discount, but it also could be $1.01 because
$10.
utility.
It's binary, right? It's 0 or it's 1. Right?
Yeah. So, Ryan, any thoughts on that?
Just let the market decide.
Okay. And will DEXs ever become a thing? Will decentralized exchanges ever take off 5 years from now?
I think it'll be a marginal niche thing, but it'll exist. It'll have some utility, but I mean, from my personal perspective, there's a giant kind of elephant in the room is that there's no banking attached. So maybe you'll have Tether or whatever, but the main kind of value out of the DEX is trading shitcoins for Bitcoin. I think there's going to be a lot less of that in the future. So I don't know.
And it's in a less, in a more frictionless way. So if you want to flip $5 worth of, Bitcoin into something else, why would you go through all the KYC AML? I think that's kind of the niche that you're describing.
But it's not going to be for price discovery. I mean, it's almost like the speed of light dictates that it will never be the primary venue for price discovery.
Never. It will never be the primary venue. It will serve a niche use. And that technology will get better and better, but you cannot do high volume. I mean, I haven't seen anyone propose a solution that you could actually trade on. I mean, you can sell or buy and move on, but you can't make markets.
Right.
Please.
So Brian, no plans to launch a DEX alongside BTSE? No, okay. And then lastly, will there be another BitConnect style Ponzi in the next 5 years? BitConnect Cash, what do you think?
That's going to be going on forever because we can see that you have the internet, it's out there, there's all this communication, everything, and still you go and find your grandma, talking about Amway or whatever. These like multi-level marketing, pyramid Ponzi's, they're going to be on for all of humanity, forever.
I don't know about that.
He's saying Lehman Brothers.
Oh, okay. Gotcha. Well, thanks guys for having us. Thanks to the panelists. Big round of applause.